90% of people lost money in crypto over the last year. You got Sui down 75%, Render down 60%, Caspa down 65%. What happened? We were promised salvation and we got wrecked. Is the all season dead? Is crypto dead? It's neither of these. Turns out what we were looking for was never in the cards because the right pieces weren't in place. I've been digging into this over the last few months, and I want to share with you what I've learned. I think this can help you navigate the future of crypto and help you understand where you went wrong. So let's go through these together. And this is going to be a video where you learn something that you can take away and use it to your advantage later on. Now, it's the business cycle and the liquidity cycle that drive crypto markets. And what we didn't see pan out for us last year at the end of the 4-year cycle was the business cycle. Now, this is the business cycle, and it's basically just the movement of the economy over time, up and down, up and down. We have peaks and troughs. If you're a business owner, you already understand this. Now, the way we measure this is something called a PMI, Purchasing Managers Index. ISM stands for Institute for Supply Management. So we have not really had an expansionary moment in the economy really since October of, coming out of the 2021 cycle. We started to work our way down. So why does this matter? Why does this PMI matter? Now, let me show you the connection that PMIs have to altcoins. Now, this black line here is PMIs. The orange line here is all the altcoins minus the top 10. You can see the connection. As the PMI goes higher, altcoins also go higher. As PMIs come down, altcoins also go down. It's something that Raul Paul talks a lot about. Folks over at Real Vision, they focus on the business cycle a lot because this connection is there. If you look back to if you go out to 10 years, look at where we were in 2021 when we had that last run up. We were at 64.7. That's huge. Anything above 50 is expanding. 64 is huge. And you can see that we've never gotten there. 2017 cycle, we were at the high 50s. At the end of the 2025 cycle, we were below 50 here. At the end of 2025, we were below 50. We were in a contractionary environment. And as they say, the business cycle is the temperature check on the average investor. If businesses are not thriving, if the economy is not expanding, if economic activity is not accelerating, then we're not going to have big surges in prices. Now, what are we seeing here? We're seeing a resurgence of the business cycle. And this is because of the AI build out that's taking place. And if you've been with me for a while, this is something I was screaming about last year, saying that we're not going to see a business cycle at the end of 2025. We're probably going to see it at the end of 2026. And so when we had the big run up in Bitcoin's price because of a fairly normal liquidity cycle where liquidity in the system, money in the system was going higher, Bitcoin was following, and it was kind of taking the altcoins with it, kicking and screaming. They don't really want to respond to Bitcoin. They want to respond to ETH. I still believe that Ethereum is the one token that can rally all the other altcoins and whip them into shape. We didn't see ETH rally. So why would we see the altcoins rally? They come up kicking and screaming with Bitcoin. And then when Bitcoin falls, Bitcoin takes the escalator down, alts take the window down. And that's kind of how it goes. And so a lot of us didn't think there'd be an end to the 4-year cycle or the crypto cycle until we had an alt season. We were waiting for an alt season that would never come. Now, why did Bitcoin crash so violently? And so it wasn't enough that we didn't see an alt season. Then we had Bitcoin fall off a cliff and it brought the whole rest of the market down with it. Now, what happened and why? China tariffs. This was the black swan event. You talk about a black swan. What is a black swan? That is a black swan, an unforeseen event that creates a massive cascade of liquidations. And that is what the problem was. And that is why we saw this happen. A 45% move down over 3 to 4 months. This was the result of massive leverage. It was a combination of things, some troubles from the Fed, other areas. And so this was a liquidation cascade, a leverage cascade, essentially collapsing. And ultimately, what this is setting up for is a bullish, I think, rest of the year. And I'm going to tell you why here in a second. This is the problem right here. This is a liquidation analysis right here. You can see that the cumulative total of liquidations absolutely skyrocketed on October 10th. Whale shorts open. Wonder what happened there. Then here comes the Trump tariff announcement. World Liberty Fi sells off. And then you have long and short positions just getting liquidated. Just a complete bloodbath. And this is a chart that shows you how quickly prices dropped. We had a massive crash here, a little bit of a correction back up, But ultimately, within a day, we had the Bitcoin price about 90% of where it was. Now, while this was happening, global liquidity was actually going higher. So we saw a divergence between global liquidity and Bitcoin. And this is why this video is so important, because we're going to explain why there's been a disconnect between an otherwise pretty tight correlation between liquidity and Bitcoin. I've got a clip from Darius. He really breaks this down. Have a listen.
There was a lot of excess leverage being applied to the Bitcoin asset class when you consider the myriad of derivative products that Michael Saylor's firm strategy applied to the asset class. And in my opinion, I think that just caused the context of the risk off market regime that eventually developed over the past over the past 6 months or so, and particularly the bearish crypto winter that developed in that time frame. I think a lot of that leverage essentially needed to get rinsed out, for lack of a better phrase.
And so this was the problem. This chart right here is a problem. This is open interest. This shows you basically the amount of longs or shorts that are open. And when we peaked right here, October 10th, 2025, we were at absolute peak open interest. And what happened over the course of the next several months is we watched this open interest get flushed out. Now, you could say this is manipulation. You could say that it's healthy price action. I couldn't tell you either way. I have to imagine some of it was probably, some foul play, but it is what it is. This is the reality situation. It doesn't really matter how we got there. What matters is that we got there understanding the mechanics that brought us there. Insanely high leverage. This was a leverage sweep. Total derivatives volume, if you look at the average volume here, you can see that for the most part, we stay kind of underneath it. You have these white pockets underneath here showing you that we're not like completely destroyed on leverage. And then you get past, June, July here, and you just start getting into really, really high derivatives volume in crypto. And so this is what happened. This is why we had such a big crash. Now, why does it matter now? We're 6 months after the fact. Why am I telling you about this now? Because I'm starting to see the pattern reversing. We're starting to see this open interest has been flush. We're starting to climb up and make new highs. And that's because if you look back, this global liquidity is still going higher. The US has pushed liquidity through a number of means. They've empowered private banks to buy more bonds and push more liquidity. The Fed and the Treasury have been pushing more liquidity. And in the background, what we have happening is that secret component that we didn't have last year. And I'll zoom in here, is the business cycle. As a result of this CapEx expanding, as a result of the data centers getting built out, for better or worse, you can make the argument, but it doesn't matter. For our purposes, for understanding, crypto in relation to the business cycle and into economic acceleration, this is showing you that we are creating the conditions that were necessary prior March 2021, September, October 2017, above 50. And you look back to our fourth year of our fourth 4-year cycle, and we were down in the dumps down here. While we saw a pretty normal liquidity cycle, this is a liquidity run up right here. We saw Bitcoin follow it. We never saw this do its thing. And therefore, this was never allowed to happen. 2021, here's PMIs, here's the others. End of 2025, here's PMIs, and here's the others. Down in the dumps with the rest of us. And so this, to me, is at least a component of this setup that is important to understand, because history has been a pretty clear indicator in this case. And at the end of 2025, when I was telling people don't look for an alt season because PMIs are in the dirt, a lot of people told me that we're nearing the end of the fourth year and that alt season must come. I'm looking at the conditions that enable an alt season. If you look at an alt season, you say, okay, this is a retail driven speculative frenzy. This is an environment where the liquidity is abundant and people are feeling wealthy. Their businesses are expanding. The economy is expanding. People have more jobs and more overtime and whatever it is. They're going to invest more, but we never saw that. We just never saw it, but we're seeing it now. And so these, 52, 53, we need to go higher. We need to get back up to, the 60s. We need to get back up to the high 50s, the mid 50s, the mid 60s, dare I say. That'd be insane. So this is the signal, guys. This is really what I'm looking at here. Is I'm looking at liquidity, I'm looking at the business cycle, and I'm keeping in mind that if you want to have an alt season and you want to have this big bullish blow off top period, you probably need to have both. Now, so far, so good. I think that we are moving towards that direction. And so maybe I'll do a video explaining to you why I'm so bullish on the end of this year, why I've been bullish on the end of this year, really since end of Q3 of 2025. And these are the two components I'm looking at: the business cycle and the liquidity cycle. Now, there's a lot that goes into that, and I'll have to do a separate video to break this down. But ultimately, I see a lot of people starting to get hopeful again, and I want to ground you in the data and help you understand that. Don't get too excited if you don't see this breakout. Don't get too excited if you don't see liquidity continue to break out, which it seems like it's going to as of now. These are the components that we need. There was a component that we didn't hit last year, and I think it makes sense why we didn't see the alt season that we wanted. So I hope that makes you a little more informed and a little more confident moving forward. If you got wrecked, you weren't the only one. There's a reason why. And now you have the ability to say to yourself, what am I looking for in the future? Now, this is not a promise or a guarantee. Like, we could see anything happen, right? I do not have a crystal ball, but I am looking at the data and the history that is available to me, and I'm trying to make the best informed decision that I can. And that's what you got to do. You got to plant your flag if you want to make money in the crypto markets. Got to stand for something. So I hope this is something you can take away with you. I hope this is something that makes you understand our current position a little bit better. And in the future, I will build on this and help you understand why I am very excited about the end of this year. Until then, if you appreciate all the research that goes into these videos, throw me a subscribe down below. It means a lot to us. Also, leave me a comment. Let me know if you learned anything. Do you think the business cycle is to blame for no alt season, or do you think it just wasn't time? In either case, thank you for being here. We'll see you in the next video.